Welcome to Explain It. So, the big budget 2026 is out, and you've probably seen the headlines, heard all the experts arguing, but what does it all actually mean for you, for your wallet? That's what we're going to unpack right now, looking at how it's going to affect your investments, your savings, and maybe even your job. Let's dive in.
So let me guess. You looked at your trading app on budget day and yikes, right? A sea of red. The markets took a nosedive almost immediately after the speech. But you know what? That sudden drop, that knee-jerk reaction, that's just the tip of the iceberg. There's a much, much bigger story playing out here.
So in the next few minutes, we're going to cut through all that noise, all that complicated economic jargon. I'm going to show you exactly what this budget really means for your savings, your investments, and your future security. Let's make sense of it together. All right, first things first, we need to get one thing straight. This was not one of those feel-good budgets. You know the ones I mean, a little tax cut here, a little freebie there. Nope. This one's different. This is a budget that's built on a feeling of, well, confidence. So, why the long-term game? Well, think of it like this. The economy is actually doing pretty well. Growth is solid, and inflation isn't running wild. So the government feels like it doesn't need to put out immediate fires. Instead of a quick paint job to make the house look nice for a party, they're deciding to fix the foundations for the long haul. This budget is all about that deep, long-term work. Okay, so let's get to the first big impact, the one that a lot of you probably felt right away. If you're a trader, especially if you deal in futures and options, well, your trades just got more expensive. They've cranked up something called the Securities Transaction Tax, or STT. It's that little tax on every stock market trade you make. And as you can see here, it's not so little anymore. For futures, the tax has more than doubled. And for options, it's a pretty big jump too. The bottom line is simple. Every single trade you make in these segments is now going to cost you more, and that eats directly into your potential profits.
And that right there, that's a huge reason why the market freaked out on budget day. Like market expert Ajay Baga said, this was a complete surprise, and not a good one. It's a direct hit to anyone who trades frequently and to the brokers as well.
So what's the big takeaway for you, the retail investor? The message from the government is crystal clear. They're making it tougher and more expensive to be a high-frequency, short-term trader. It seems they'd much rather you think about investing for the long haul instead of just speculating day to day. All right, moving on. The next one is a little bit sneaky. It's a hidden catch, really, that could affect a lot of people who invest in gold, especially through those super popular sovereign gold bonds. So here's how it used to work. You could buy a sovereign gold bond from anyone, maybe on the stock market, hold it to the end, and poof, your profits for tax-free. Super simple. But now, that tax-free benefit is only for people who bought the bond brand new directly from the RBI in the first place. Big difference.
So let me be really clear with this warning. If you're browsing the stock market for SGBs, thinking you're going to get a tax-free deal at the end, think again. That door has been shut. That little loophole is officially closed.
Okay, let's zoom out a bit. We've talked about our personal portfolios. Now let's talk about the country's portfolio. Because this budget is making some huge long-term bets on the future of India itself, starting with how we're going to keep the lights on. The big headline here is something called the Nuclear Energy Mission. See, India's hunger for energy is just massive and it's growing. So the government is going all in on nuclear power. Why? Because it's a clean, reliable source of energy that works around the clock, which is exactly what a growing economy needs. And when I say all in, I mean it. The target is 100 gigawatts of nuclear power by 2047. Now, that number sounds huge, and it is. To give you some perspective, we're at about 8 gigawatts right now. So this is a more than 12 times jump. We're talking about enough power for literally tens of millions of homes. It's a staggering goal. So why should you care? Well, down the road, this could mean more stable electricity, not being so reliant on other countries for fuel, and it creates the foundation for more factories and more jobs. But, and this is a big but, let's be real. This is a plan for 2047. Your electricity bill isn't magically going down next week because of this.
Okay, so we have a big bet on energy. But that's not all. There's another huge long-term bet being made, this time on tech and jobs for the next generation.
The government wants to turn India into a global tech hub. And how are they doing it? By rolling out the red carpet for data centers. These are basically the giant brains of the internet, where everything from your emails to Netflix shows are stored. And they're giving these companies a huge tax break that lasts all the way to, get this, 2047. That's not a typo. It's a seriously long-term plan.
And the logic here is pretty simple. Step 1, offer a great deal to global tech companies to build their data centers here. Step 2, that creates a huge demand for cloud services and all the tech that supports it. And step 3, that means a long-term need for skilled tech jobs right here in India. It's a domino effect they're hoping to start.
But of course, nothing is ever that simple. Every big, ambitious plan has a risk attached. All these massive projects, the nuclear plants, the data centers, the highways, they cost a ton of money. And the government doesn't just have that cash lying around. It has to come from somewhere.
And that brings us to, well, a jaw-dropping number, 11.7 lakh crore rupees. That's how much the government needs to borrow next year alone just to cover its bills. It's a huge amount of debt to take on.
Now, this is a calculated risk. It's a gamble. If the economy keeps growing strong, they can handle this debt. No problem. But what if it doesn't? What if growth slows down? Then all this borrowing today could become a major headache for us, the middle class, tomorrow. How? Through things like higher taxes, more expensive loans, or just good old-fashioned inflation.
Okay, so we've looked at the good, the bad, and the long-term bets. What's the final verdict? What does this all mean for you, whether you're an investor, a salaried person, or just someone trying to save for the future?
Let's boil it all down. This was not a feel-good budget. There were no immediate goodies or tax cuts, and it's definitely not a trader-friendly budget. What it is, though, is a long-term nation-building budget. It's a plan that's really asking for patience. It rewards people who are thinking years, even decades ahead.
And really, that leaves all of us with a big question, doesn't it? This budget basically forces us to choose. What do we prefer? A little bit of short-term relief in our pockets today? Or do we want to invest in long-term stability for the next generation? It's a tough one, and the answer to that is really going to shape what our future looks like.